Markets started on a very quiet note. The T-bills market was really quiet. There wasn't much activity. Guess most of the traders were anticipating the OMO auction tomorrow. Anticipating the OMO auction tomorrow, as well as
on the OMO auction,
as far as the maturity of the maturity, there will be an OMO maturity tomorrow about 275 billion. So a lot of traders anticipate that there will be an OMO auction tomorrow. So the activities have been very quiet on the T-bills market. On the bond market has also been quiet. We saw a little bit of bearish sentiment on the 2028 and 2037 bonds. Also, there was towards the end of last week, there was the bond calendar for Q4 came out, and then most of the traders were anticipating what will happen in the next bond auction. We see that activities mainly are centered around PFAs filling positions, and basically that has really been the little activity we've seen in the market so far.
Okay, interesting. Can you give me what you think about the situation of the yields in the market and how they are trending?
Okay, for bonds and the yields, a lot of people were actually anticipating that we see about 16 levels, but that obviously is not going to happen, at least not in the next future. So people are comfortable playing around the 15 levels, 15.2, 15.3 levels. We see this continue through the end of the year, and of course with the election coming in, and then the exit of the FBI. So we really don't see any major activity on that side of the market.
It's good you mentioned the election. I wanted to know your thoughts on what you think the election spend. How do you think election spending will impact the markets?
Well, already we've started seeing a bit of it. The CBN has been proactive in checkmating some of the funds that they anticipate will come in as regard the election spending. What I can say is that with the exit of the FBI, especially as regard the election, it's going to center around people anticipation of the political risk. What people feel that would be the impact on the political aspect of it, which for me, I think already been priced in. And then, of course, the rate hike by Fed, also having a bit of impact on the market as well, because, most foreign investors who ordinarily will leave because of the election are also leaving because of the rate hike in the U.S. And so all that, add together is also having its own effect.
Quickly, I want you to speak to share your thoughts on the 2.8 billion euro bond, what you think about it, and especially with regards to the pricing.
Okay, the federal government, as part of its funding for 2018 budget, first of all, this is the second tranche. The first one was in February, 2.5 billion, and then they've also made a proposal to the National Assembly, which resumed yesterday, of 2.8 billion euro bond. This is obviously to fund the deficit in the 2018 budget, and so it's also left to be seen if the government, if that will be, because we just have barely two to 3 months to the end of the year, and then electioneering activity will set in. So yeah, the Ministry of Finance have been in Europe. I understand they have been in. They've been having some road shows, and as well as trying to get foreign investors' attention to this Eurobond. So we are looking at it. Everyone is sitting on the fence, and let's see what we come out of it.